Hi, everybody. I'm Bob Marone for Westchester Talk Radio. And once again, we are with our friends from Hightower, Westchester. Today, we're with Richard Flahav. He's a private wealth advisor and the director of research and planning at Hightower, Westchester. We're fortunate to have him back with us today. Let's get down to business. We recently went over some investment strategies during bear markets, but today, we want to focus on some planning strategies that you advise your clients on during market downturns.
Yes, Bob. Thank you for having us back on here. Appreciate the time, and always good to see you. When you look at what's happening right now, I mean, whenever there's more red than green on Wall Street, the impact can be felt on Main Street, as we like to say, and in people, as people focus on their retirements and their investments and their cash flow. And I think it's a great opportunity, and this is what we've been doing a lot with clients, is just to take a step back and really review the plan they have in place. And if you don't have a plan in place, let's get you one. And I think the biggest question you have to ask yourself is what's changed? Has my lifestyle changed? What do I need to do to, either increase my cash flow, decrease my cash flow? What's really changed in your life? And I think anytime you get this heightened kind of market volatility, you have to take a step back as opposed to making any rash decisions and understand the plan that you have in place. And it can help you remember why you're investing and what you're doing for really in the first place, whether, you're investing, whatever the goals may be, that's what you have to review. The other piece too is from a planning perspective. I mean, there's Roth conversions, there's other things we'll get into here. But, I think the important thing is don't think of this as all or nothing, right? Times will change. Let's go back to the plan and drawing board and really understand, what's going on.
Wow. Obviously, one wants to be prepared ahead of time for a bear market, although I don't know how you can be. What are some tips? What are your plans in order for us to deal with that?
Yeah. And you mentioned how to, there's really no perfect plan, but I think the idea is to obviously prepare the best you can. And the first step is to get a financial plan built out. Whether you have it built out, revisit it. I think the important thing is what we saw through COVID. COVID changed a lot of mindsets, right? Okay, hey, listen, do I have to go back on the train to get into Manhattan? Do I have to go back to work at all, right? The market's down, there's a global health scare. What does this mean for me? And I think, using that as an example is a good one, because it was, okay, let's go back to the plan. Can you retire? What did we originally build in for retirement age for you? What does that look like? Can you afford to step back, even work part-time, right? So we ran a lot of those plans. But one of the big things to prepare for a drop like this is having that emergency fund and your budget in place. Whether it's 3 to 6 months or so of savings that can get you through, that a lot of times will help alleviate fear and avoid indiscriminate selling. And I think having that nest egg built up, particularly just cash, just out and outright cash, because a lot of times I always say to clients, they want to start with us and, oh, hey, I've built this nest egg. How much should we give you? What should we contribute on a monthly basis? I always tell people, build out that nest egg first and then let's talk, right? If you still need to save for it, do it. And then we'll have that conversation. But I think the other thing is if you're retired or approaching retirement, these are the folks that we've had a lot of calls with who are nervous. The one thing I always reiterate to them is, guys, you're not withdrawing all the money today for retirement, right? Yes, a portion of it you'll need, but keep in mind, this isn't like, oh, hey, the account's down, 10, 15%. Oh my God, I this is it kind of thing. Think about it. If your account's down 15% and then you withdraw a bunch more money, you're just adding that on to the amount that your account's going to be down. Withdrawals in bear markets just kind of compound the problem. So managing those withdrawals and the cash flow as you're approaching retirement and in retirement is a really important part of planning, both from a tax efficiency standpoint, liquidity, comfort, et cetera. If you need money out of your portfolio, let's say, $5,000 a month or so, or $60,000 a year, it's wise to have that liquid, whether it's in a cash equivalent, or something you can draw on as well. So that's where it comes back to planning, having that conversation with your advisor, and also just having a diversified portfolio, that combination as we talked about in the previous podcast. But one other thing on the planning side that'll help you kind of prepare for it is most software programs will give you the ability to stress test your financial plan. A lot of people call it a Monte Carlo, which is kind of randomly generated market simulations, that we've seen over the past, 20, 30 years. Okay, if you run it through this, call it stress test or Monte Carlo scenario, what's the downside? What's the upside on that kind of bell curve, standard deviation curve? And what does that look like, if my portfolio goes through a bear market? And that puts people at ease as well. That's something we'll run for clients, so they're aware of what those outlier scenarios look like.
Sometimes, Richard, the first call an investment advisor like yourself gets is the person who has no plan. What then? What advice would you give to someone who needs help?
Sure. The first most important thing is don't panic, right? The markets are going to open tomorrow. They're going to close tomorrow. They're going to open the next day. They're going to close the next day, right? This thing is going to go on. I think if you don't have a plan and you're worried about cash flow, the most important thing is manage your liabilities appropriately, right? What are your outflows? Not just liabilities in general, but what are your outflows? Understand them, right? There's basic and, need spending, and then there's discretionary spending, as we know, right? Rein that in, take a look at what it is, whether it's paying off debt, because you don't want the interest compounding on you, right? You end up paying interest on some of that debt. So understand your liabilities, understand your outflows. If you have a credit card, sometimes calling that credit card company, and this is if you're in a situation where you need cash flow, sure. Sometimes you're able to skip a payment or enroll in some sort of payment relief program. And if you don't have that emergency fund to cover your living expenses, maybe, the other option, there's a couple different options here, right? You can potentially stop contributing potentially to your 401ks or stop making IRA contributions, right? This is where looking at the totality of the plan, if you don't have one, okay, let's take a step back. Where's your money going? Where is it coming from? How do I maximize my inflows and minimize my outflows? But I mentioned it previously, for retirees, focus on that tax efficiency too. And this is where just because you don't have a plan in place, let's start building one out, right? Let's get those legs of the stool in terms of the account types you have: pre-tax, post-tax, Roth accounts, taxable accounts. Let's look at the gains and losses you have. What's the cash you have on hand? Starting building out this plan, going forward will also be important. I know Roman's doing a whole podcast on Roth conversions. I'm not going to dive too deep into it, but a market drawdown presents a good opportunity to convert, that higher percentage of a pre-tax account to a Roth account for the same amount of taxable income. And that can be pretty powerful for those who otherwise should be doing a Roth conversion given their tax rate. And we talked about this in my previous video cast is, you can opportunistically start adding to the markets, right? As we mentioned, right? Is it time to buy here? Hey, let's build out this plan. You might not have it in place, but hey, you have some dry powder. It's a good time to have some cash. Mentioning Buffett again, when the tide goes out, man, he's got those reserves on hand to, help lend to banks, whatever as he's done in the past. So having that emergency fund starting to build it out will be important.
What do you say, since we're just talking about Roth IRAs and 401ks, what do you say to those who just entered retirement or may be retiring in the next year or two when the market's down? Yeah.
And I'll say that don't panic again. The one thing we're seeing with people, and particularly that ultra high net worth, right? They're living a lot longer. The days of retiring at 65, 67, taking Social Security and, passing away in your 70s, it's not the norm anymore, right? You might live in a 30-year life still to go, right? You might live to your 90, 95 years old. So again, going back to my previous comment, you don't need all the money right now. You need to take some risk because over the long term, you need to keep up with inflation. And need to make sure you have the appropriate allocation. But from a planning standpoint, listen, let's look at the liquidity reserves. What do you have on cash? What's your spending look like? Review that. And listen, do you need to retire? Do you want to go back part-time? Should you work longer? I think if you're planning to retire in the next year or two and don't know if you can financially, hold off on giving notice until you know you can, right? Build out the plan before you give notice. And once you have that plan built out, you'll know whether it's appropriate or not to retire. Just figure that out and act accordingly instead of, really just not doing anything. I think it's important to have that conversation. For the amount of money that people have, you'd be surprised how little have these plans built out, whether it's financial or estate planning. So something to think about as you look at retiring. Going back to the whole employment thing. I mean, when you look back at 2008 and the great financial crisis, that was a different time, right? Employment right now is pretty strong. You're able to work longer and potentially stay on. Back in 2008, I had a lot of friends that were graduating college around that time. There were no jobs to be had. No one was hiring. So it's a little bit different now.
Any other thoughts before I send you on your way?
Yeah. I think you don't know what you don't know. But I think what's important is in times like these is, not everyone's a journaler or something like that, but reminisce on your last time going through this, right? You understand, journal your thoughts, your feelings, whether it's a mental bank or on a pen and paper. Study your past trades for someone like myself and us. Like, what have we done in the past? Talk to others that have been in the business longer, right? Talk to people who have gone through this and done particular planning techniques, because sometimes you don't know it all, and it's important to take in what's past, what's happened in the past. And I think also take some time for yourself, unplug a little bit, right? This is a good time to just reflect on what's going on, and also bring in a third party, right? And I don't mean that in a self-serving manner, but like I said, you don't know what you don't know, whether it's, a friend, a family member, an advisor. Don't be shy to ask for help. That's why we're here. I think many new retail investors, they see the first sign of trouble in the markets and they're running for the exits. That's not a good strategy, right? Talk to people, have them walk you off the ledge, at least get a second opinion on things. It can really put your mind at ease.
Another good reason to have a financial advisor to keep you from doing those kinds of things.
Sure.
Richard, thank you very much. We've been talking with Richard Flahav, Private Wealth Advisor and Director of Research and Planning at Hightower Westchester. Thank you so very much for being with us again today.
Thank you, Bob. Appreciate it.
Take care.
Hightower Westchester is a group of investment professionals registered with Hightower Securities LLC, member FINRA and SIPC, and with Hightower Advisors LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities LLC. Advisory services are offered through Hightower Advisors LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. Hightower Westchester and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of Hightower Westchester and do not represent those of Hightower Advisors LLC or any of its affiliates. Hightower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.